Good morning, everybody. It's the 19th of May. Welcome to the latest video from Signal Centre. I'm Joe, joined by Jamie and Steve. Good morning, gentlemen. How you both doing?
Morning.
All good, thank you.
Yeah, not
Good.
too bad.
Excellent. Okay, let's get stuck into the latest headlines then. Just to start us off today, we've got Wall Street stocks slumping yesterday, registering sharp losses. Sorry, I'm all over the place this morning. The sharpest one-day decline in the S&P 500 since June 2020, so pretty savage stuff, which we'll come on to in a moment when we look at the charts. Weaker than expected results from key consumer-orientated companies triggered renewed fears over the overall economic trends and potential squeeze on margins, which pulled the overall market lower. The Fed have been fairly consistent on their discussions regarding rate hikes. The Chicago Fed President Evans reiterated that interest rate increases should be front-loaded. He considers that a neutral rate is in the range of 2 to 2.5%. So obviously very much on the table at the next Fed meeting. China hopes to cushion risk conditions slightly. They attempted to stabilize on Thursday as Shanghai announced plans for a further slow easing of restrictions, which is obviously good news. The dollar retreated from its highs. It posted gains yesterday as risk appetite deteriorated sharply elsewhere. Again, we'll come into the chart shortly. And we saw the Swiss franc rally strongly yesterday as well. The Swiss National Bank Chair Jordan stated that the Swiss currency is a safe haven, which means that negative interest rates and forex interventions remain necessary to meet the bank's mandate. So we could be seeing them stepping in again at some point, which a few of us have got some bad memories from previously. We saw the Canadian inflation number hit 6.8% yesterday. There was also further increases in the core inflation rates. Following the data, there are even stronger expectations that the Bank of Canada would sanction another 50 basis point rate hike at their June 1st meeting. So let's get stuck into some charts. Steve, would you like to kick us off this morning?
Yeah, sure. I'll dive straight into Bitcoin, which remains under pressure. So we had a bearish engulfing day on the 16th. That was Monday, is it now? And we also had the same yesterday. This week we had a indecisive day Tuesday, a inside day, and then we've engulfed that as well with price pressure pushing us down back to below the 29,000 level. 29,000 is pretty key to hold on to this for Bitcoin. And it does feel like we're going to see further downside on the short-term charts. It's failed now to get above this 31,500 level. For me, that's the sort of initial resistance before we see resistance on the downward trending resistance line coming in around about 33,500. Support below comes in at 25,400. Still feel like we're going to be seeing 20,000 before we see 40,000 over the next coming days or weeks. On the commodity side of things, oil has had a bit of a slap down yesterday. I was getting a bit carried away with this, talking about the upside on oil after it broke above the downward trending resistance line. Here's a daily chart which you can see. We've now retraced and we're retesting the break. So although we got down to around about 105 on WTI crude oil, price action has recovered from there, trading now at 106.75. And again, if you look at the 4-hour chart, we've had a really nice reversal here with the bullish hammer being posted. So this might be just that retest that the market needed before we maybe continue higher. We had oil inventories out yesterday, which had a negative impact on the price action. And this, for me, presents a potential buying opportunity. I'm still bullish on oil over the medium term. On gold, this remains under pressure. We were trading just above the 1800 level yesterday, and we managed to get up, retest the 1825 level. So resistance coming in at 1825 and 35. But for me, the main resistance would be around 1850, which was previous support. Down below, We've had a little brief encounter with 1787, and support really for me comes in just below that at 1783, which was a swing low that we saw at the end of January. That's it from me.
Nice, thanks, Steve. Okay, let's have a look at FX then. Bring up the chart on dollar index to start with. So, bit of a reversal on that yesterday. I mean, we have had 3 consecutive down days prior to that. Just looks as though it's pulled back into some support. We've got some trend support here and a horizontal support of 102.98. So still looking pretty strong and robust as things stand at the minute. If we look at euro US dollar, we can see that that gave up some of the gains yesterday. So we've got this annotation on the chart, maybe indicating that there was a short-term bottom forming, but I think we're still going to see more choppy price action on that for the time being. As we mentioned in the news, we saw a decent move in the Swiss franc. So we saw euro fail against that quite spectacularly yesterday. A big move, big engulfing candle, bearish outside day formed yesterday, and that sort of overshot a bit of resistance. Looked as though maybe it was going to retest the reverse side of this before moving higher, but we've seen a fairly swift rejection on that. So potential that we are seeing some money flood back into the Swiss franc in the form of a safe haven. What I was also interested in seeing yesterday was the head and shoulders setups that we talked about in some of the yen currencies. So this was Aussie yen. Looks like a really neat head and shoulders on the daily charts. We saw the breakdown of the neckline back on the 10th and 11th of May. We saw a decent push to the upside, which looked as though it was actually going to overshoot the neckline. We did see a close above it on the 17th of May, but we engulfed all of that yesterday, posting a really bearish looking candle into that neckline. So it looks to be quite a classic play out of that head and shoulders there, which as technicians we like to see, of course. Looking at euro yen, again, big engulfing candle yesterday, not as clean looking on this one in terms of forming a top. In fact, it's just gone into this big band of support here on that particular currency pair. If we look at sterling versus yen, similar situation to what we just saw on the Aussie. We had an overshoot of the neckline. Wasn't a classic retest, but we have posted this massive engulfing candle yesterday. So it looks to be on the back foot, and I'm expecting to see lower prices. This played out quite nicely actually. This is the gun to the head trade that I did yesterday. So really nice range setup there. We were selling at the upper end of the range, and pretty much prices have collapsed to the tick to the lower end of the range, which was really nice indeed. I'm going to move on now.
Look at that.
Yeah, love that. Going to move on to the indices. Obviously, some big moves in those yesterday. I'm going to start off with the S&P. Another situation where we've got a head and shoulders top that looks to have formed. So this has been taking place over a number of weeks. We saw a really big move to the downside here on the 9th of May, which looked to have completed that head and shoulders top. And yesterday, we saw after the rally into the neckline, the horizontal line at 4107, we saw this really big move to the downside, the largest one-day move on the S&P 500 since June 2020. So that looks pretty sick in my eyes, and I reckon we're going to see much lower prices there. I've got a measured move of the head and shoulders down at all the threes, 3,333. So potentially more pain to come. That would also signify a downside move of around 31% on the S&P 500, which would be quite painful, I think.
Yeah. It feels like it's building towards that, doesn't it?
Yeah, take a quick look at the NASDAQ as well. Big down day there yesterday, engulfing all of the previous day's gains. Still holding around this 50% fib level that we've got in yellow. So I think while that maintains as support, we could see some people speculatively trying to buy that and get in front of it. But if that is to give way, then I think, again, we could be looking at lower prices down potentially to the 61.8 at 10,507. So I'm going to leave it there. And Jamie, you can talk us through some stocks.
Yeah, thanks, Joe. Right. Well, firstly, we'll dive into our biggest gainer and loser of the day. Our biggest gainer being this, which I've not heard of before, but it's called Decision Point Systems, up 70% on earnings, or just after earnings, actually. But yeah, looking happy time for holders of that. But the big loser is the one that was in the news yesterday, and that's Target, which didn't hit its earnings targets. Actually missed them quite considerably and sold off 25% almost on the day. I think the lows were more than
Wow.
that. So a real tough day for Target. If we look at that on a weekly time frame, it tells a bigger picture, really. We've obviously had this really nice trend for Target for a long time, this bullish trend, but this looks very toppy to me. We had the initial pullback, it couldn't regain the highs. A lower pullback couldn't regain those highs. And now a really big sell-off. So
I mean, that must be a big miss as well, to sort of have that sort of reaction, a 25% drop in the share price based on.
yeah, I mean, maybe we could
based on
take a
the.
look at the corporate calendar afterwards to
Yeah,
maybe
that might
dig
be
into it a bit
good.
more.
Yeah.
But yeah, a really big miss. And like I say, there's not really been kind of since the end of 2018. It's been one way. Even with the pandemic, it recovered very quickly from that. So yeah, not a happy time on Target. I'm actually going to go a bit off the rails here. I wanted to share something else which is off trading view. So this could go a bit wrong very quickly, but I thought it was interesting. So give me 1 second. Let me see if I can quickly find it. Let's move that there. So what I'm trying to share, there we go, is this. So this is a heat map of the S&P 500, which breaks everything down into their different sectors. And I think I might try and refer to this a bit more because it gives a really nice overview of what happened in the market and what happened in different sectors. And you don't need to be an expert in analyzing the markets to see that this looks like it was a really bad day. Just red across the board. You see all the big names. You got Microsoft down almost 5%, Apple down more than 5%, Google, Amazon, Tesla, the lot. Everything was down. The one ray of hope we do have is this TJX in consumer cyclical. But yeah, a very bad day all across the board. I think you said, Joe, it was the worst day since June 2020, was it, in S&P? So,
Correct, yeah.
So yeah, a really bad day. And you can see at the bottom here at the key, anything that's in this red color, which is pretty much everything, was down 3% or more. So no real relief in stocks. We saw a bit more of a sell-off coming, and I'm still not convinced, like you were saying, that we've seen anything near the end of it. So I think we've got a bit more to come on that front, right? I just thought I would quickly show you that because I thought it was quite interesting. We'll jump back over to some more stocks quickly. And yeah, I mean, you can see the same story here. It's just red, red, red. But what's interesting from a superficial basis is usually when we have these bad days, we have kind of 3 or 4 stocks that are down a lot, and then the rest kind of down like 2, 3, 4%. But it seems like all of them were down at least kind of 3% of the ones I looked at. There was only a few that ended up positive, and I know Upstart, look, it's fighting back. But yeah, just across the board. I mean, you can pick any one of these. Coinbase just continuing to struggle. There's something we've looked at a lot recently, but it's not looking like this is going to be showing any signs of real bullish behavior anytime soon. Obviously, we did have a big influx of buyers here, but I'm certainly not convinced by the rally at all, as is the case for a lot of these stocks. GME, I said to keep an eye on perhaps a continuation type head and shoulders here. Looks like we're going to be coming back and retesting this $80 level soon. That looks like the next stop for GME. And a break of that, and we're seeing moves. I think we did look at this. We're seeing moves much, much lower. If we kind of take a target for the head and shoulders, I think we might have done this the other day, but we'll do it again for people that didn't see it. We're looking kind of towards that 32, 33 level, which is actually, look, if you come back here, it's that previous level of resistance. So that would be the next realistic target on the downside, I think, for GME. What else should we take a look at today? And I'll say while we're recording this, if anyone does want any particular stocks looked at, you'll feel free to leave a comment on our videos on YouTube or TradingView, and I will take a look at them either on that day or the next chance we get. But yeah, I mean, there's not too much more to say, honestly. A lot of red across the board. We'll jump into my 3 interesting level stocks quickly. This is DBO, Invesco DB Oil Fund. and we're at quite an interesting level with that. We've had this strong uptrend for quite a while. We did have this pretty big pullback in November, but since then it's pretty much been one way. And we've run into this resistance at $19 quite a few times now. We ran into it 2 days ago, couldn't break through it, and obviously had the sell off yesterday. So I'd be looking perhaps for a retest of this trend line. And the next time it gets up here, I think if it doesn't break, that's when it starts to compare. It's just like, right, if you can't get through on the 5th time, it's like, why can't you get through? And perhaps there'd be a bit more of a retracement coming after that. PBT, we did look at yesterday, formed this tweezer top type pattern here at resistance. I'm still hopeful for a bit more of a push through this level, which we looked at yesterday is kind of 14.30. There may be a bit of a retracement before we get back up. I think the short term, there could be a sell-off towards this short-term trend line we put in. Perhaps we retest these levels at about $13 on PBT. And last but not least, we'll check out Pcti. It was quite a small stock actually, but just quite, I think it's good to highlight some of these that have better levels and better technical patterns to show people kind of what we look at and the kind of things that we find useful when analyzing different assets. But this is a really nice channel on the downside. You can see here. You can see it's been ranging between the red resistance level and the blue support level. We haven't got down to the same lows of the blue support that we did initially, which suggests maybe it's starting to bottom out a bit. But certainly need to see more from it than this before I change my opinion on it. I think a break of this resistance would be good, perhaps a retest and then a move higher. So it could look something a bit like kind of regain the highs that we've seen here, a bit of a retest, maybe back down to kind of these levels, and then something like that would start turning my mind around on a stock like this. You'd certainly need to see that price action happen before you'd perhaps want to think about getting long on it. Because when you are in this downtrend, I think it's difficult to pick the bottom before you see price action like that. And obviously people do and people can, but as analysts, we look for kind of those good risk reward setups, and something like this right now, I don't think offers enough in terms of that to be getting long. So we'll leave it there today, but overall, yeah, really, really bad day. And hoping for at some point a bit of respite, but I don't know if that's going to be today.
Cool. Thanks, Jamie. Okay, let's talk trade ideas. So each day we focus on a trade idea. We pick live. Sorry, should we deal with that question first of all?
Yeah, would you like to?
Yeah,
it's quite a fun little question.
So mine is the Ichimoku Cloud. Yeah, I love that. It's a indicator. It's got multiple different indicators within it, but it's one whole thing. If I just show my chart, and it's quite an easy one to just add. Ichimoku Cloud. If I add that to there, it gives you a really quick. I've actually dulled the colors down. I'm just a bit annoyed about this NASDAQ trade that I called on Talking Bull the other day. I got stopped out by a few ticks. Literally, it was by 27 ticks, and it's just gone down and hit the, so that's annoying. Anyway, let's get rid of this so you don't see it. But the cloud looks very confusing to start with, but once you get your head around it, it's not. It really sort of like any time frame, it will show you what the trend is. It's got different lines in it. It sort of deserves an hour on its own, just an explanation of really how to use it, how to trade it. You get crossovers on these like moving averages. It also projects forward and tells you where to expect resistance and support. So as you can see, prices have been projected forward. These are used using EMAs of the actual price, and we can see that resistance is about here. So and then you can quickly flick through the time frames and see it's bearish on 4 hour, it's bearish on daily, it's even bearish on weekly. The thickness of the cloud tells you how strong or weak the support will be. That's weak resistance here, that's strong support down here. So yeah, that's pretty much it. Anyone else?
I'm quite simple in my approach. I think I just like standard sort of support and resistance levels, but I would say maybe one indicator that I do like to use is just a simple exponential moving average, just like a 10 period moving average, and I can use that on any time frame, whether it be intraday charts or longer term charts. So yeah, just a really simple moving average, and when we get a nice close below it or above it, say, as we did there, that can often be a nice little trigger for a turn in momentum. So that's probably my favorite, I'd say.
Yeah, nice one.
Nice. Yeah. For me, yeah, see, this is a bit weird because I've studied loads of different indicators, and I find myself, the more I've learned about trading, the less I like to have on my chart. I remember when I first got into trading, I thought, oh, you need this, you need this, you need this, like, and it all kind of helps. And it can and it does, but for me, the big thing is price action, which isn't an indicator really in the kind of what you're probably thinking of an indicator. But for me, that's the best tool I use that gives me a gauge of where price could go next. So personally, yeah, I like to keep my chart as clean as I can. I don't tend to trade off these kind of levels myself, but they're interesting to kind of get an idea of the trend. The main thing I use then is like price action, support and resistance. And I think that's, like I say, I do like to keep my charts clean, not as clean as they are at the moment, because like I said, they got rid of all my, I think what I did, it was my fault. I got rid of all my annotations. So we're building it back up. But yeah, it's support and resistance for me are the two big things I use, and price action. I try and keep it as simple as possible.
Cool.
Nice one.
Okay, gun to the head trades. So each day on the video, we call a live trade idea. We must have a stop and a target on these trade ideas. They're all placed at market. They're all posted to our TradingView profile. So if anybody wants to check those out, please feel free to do so. The ideas expire at 9 p.m. UK time, or when the stop or the target is hit. And we maintain a performance spreadsheet of how the ideas have gone. So yesterday, despite the sort of rout in the markets, we actually managed to get a couple of winners on the board. We had a nice win on sterling Swiss, which is 2.93R on side. And you two guys were mildly on side on your cryptocurrency shorts, 0.3 and 0.34R. So yeah, a decent day for us yesterday. Hopefully we can keep that momentum up and have another set of winners today.
Yeah, nice one.
Yeah, let's see.
I'm happy to go first, if that's all right with you
Yeah,
guys.
go on. Yeah,
go for it.
So yesterday we looked at this trade on sterling Swiss. Really well-defined range on the chart. Let's just make that 4-hour chart and get rid of that. Really nice range setup. So we were selling it at the upper end of the range, and it pretty much played out perfectly. So now we're at the lower end of the range. I'm going to try and play it on the other direction now. So I'm going to try and buy at the bottom end of the range, targeting a move to the upper end of the range. Obviously, at some point, this range will break, but while it's still in play, I'm going to have a go and see what we can do. So it's currently trading at 121.47. I'm going to place a stop loss below the low of the range at 120.76. And I'm going to target a move to the upper end of the range. Let's go there at 124.16. So looking for 3.75R.
Wow,
on that
you're just
one
ruthless.
today.
Just taking money for fun out of sterling Swiss.
Looks like it, doesn't it?
Nice.
Yeah, so that's my trade of the day. I'll get that published up on TradingView in a second.
Nice
Who wants
one.
to go next?
Cool. Good luck. Steve, do you want to go?
Yeah, I don't mind going.
Cool.
I'm looking at oil now. Now I've said that Ichimoku Cloud is my favorite indicator. I'm actually going against the Ichimoku Cloud for this trade idea. The main reason for the trade idea is this potential upward trending support line. I like it. I like the fact we've retraced to, as I said before, we've retraced to like this daily reverse trend line. It was a previous downward trending resistance line. I'm thinking it might act as support now. So that's the reason I'm buying oil, and it's running away from me. I set this up while we were chatting away. It was, I think the price was down at 106.40 something. It's already rallying away, getting away from me. So stop has got to be a little bit more. Yeah, that's a bit annoying. no, let's keep the target reasonable around there. 2.69 to 1 risk reward on this trade idea. I'm buying at 106.96. The stop is at 104.68 and the target is 112.99. I'll get that published right now.
Good luck.
Nice, Steve. Good luck.
Jamie.
Thank you. I'm going to try and sell Ripple today. Obviously, Steve and I shorted crypto yesterday. Excuse me. I wonder if we were a day early on the sell-off. I do think there's another sell-off coming at some point. We had the big drop a few days ago on the back of Terra and Luna. Price consolidated since. I wonder if we've got further room on the downside. So I'm going to sell XRP. We're going to have our entry level at current price, which was when I started talking, 0.4038. Our profit level will be, get rid of that, 0.3636. And our stop loss is going to be 0.4180, just above this kind of recent high here. It's a very speculative trade. I'm hoping that there's a bit more of a sell-off on the cryptos today. But looking for a 2.83 risk reward on that. So looking to sell Ripple today.
Cool. So there's 3 trade ideas, all of which will be published onto our TradingView channel. So do check those out. In terms of what's going to impact markets today, we've got a couple of data points out. At 1:30 UK time, we've got the US jobless claims number. And also at the same time, we have the US Philly Fed survey. So just 2 data points today. Upcoming at the weekend, we've got the Australian general election. So obviously, if you've got any exposure to anything Aussie linked or potentially some commodities, then do be careful if you are exposed there. That is it for today, gentlemen. Anything further to add, or are we all good?
No, we're all good. Looks like we're live on TradingView, which is quite nice. And that seems to have worked, so that's brilliant.
Yeah, perfect. So yeah, hopefully we've got the hang of that now, and people can watch it live directly from TradingView.
Excellent.
Lovely. Have a good day,
Cheers.
everybody.
Bye.
Bye-bye.